Good morning. It is 11 o'clock and this seminar or webinar was due to start at 11. As in typically with a webinar, we can see people arriving in the virtual room. But we will make a start. My name's James Pinchbeck. I'm marketing partner for Streets Chartered Accountants, and it's my pleasure on behalf of the firm to welcome you to what is our 10th annual Academies update. Before we start, a little bit of housekeeping. This session is being recorded and will be shared with delegates and will be available online after the event. We'll also be including in our firm's e-shop next week for those who want to listen to it again or want to haven't listened to it and want to listen to it or share it with colleagues. You can download the slides on the right-hand side of the screen. In the chat polls handouts. The slides are kept in or are hosted in the handouts, and please do feel free to download them there. They will be included in a link which we'll send out after the event as well. Can I ask if you've got any questions of the speakers, please do post these in the chat function, and the presenters and colleagues will answer these via the chat or in person at the end. I'm conscious that in this digital world we like to very time bound, so we'll start at 11 and finish at 12. When it comes to questions, if we've got questions that run on after 12, we will stay online to deal with those, but obviously those that have joined for the session will be able to leave. Joining us for this session today, I'm delighted to welcome our three of our Academy partners. Georgie Gale, who became a partner on July the 1st with the firm, so congratulations to Georgie. Robert Anderson, who's a partner who many of you know, is our technical partner on Academies and leads on a lot of the technical topics. And Alan Endersby, a partner in our Bedford and Y Boston office as well. Georgie will be looking at the Academy's accounts direction for 2020-21, and Robert will follow on with the Academy Trust Handbook, aptly or it seems the big change was the change in the name for 2021, and then it sounds like an agenda. Alan will pick up with any other business, which I think he has got some, so we'll look forward to hearing his presentation. The presenters will roll through automatically, just handing over to the next presenter, and as I say, time prevailing, we'll take questions at the end, but do use the chat function. So pleasure again to welcome you. I will now pass over to Georgie for her presentation. Thank you.
Hi everybody. So like James said, I will be covering the Academy Accounts Direction. So a bit of an introduction. It's been around for several years now. It's not changed form too much in the last couple of years, which is quite useful. But there are a couple of additional documents this year. So first of all, they've split out the Coketown, the model set of accounts. So that's its own separate document rather than being included within the accounts direction. And the ESFA have also added another document, which is Auditors Framework. So this is mainly guidance for us as auditors, covering both the audits we sign off, the statutory audit and the regularity audit. But this is also quite handy for accounting officers, trustees, to help understand what our role and responsibilities of an audit are, if anyone wants a bit of extra reading. As potentially, there will be a third new document. So the ESFA are also going to publish a supplementary document which will cover the reporting and the auditing of COVID aspects of the accounts. So if you remember last year, there was an extra line in the funding for educational operations note for any COVID related grants. And there'll be further guidance within this new document, which isn't yet available, but will be published as soon as possible. So the accounts direction is one of the documents must be complied with as part of your trust's funding agreements. The main requirements of it are to prepare a set of financial statements each year to 31st of August. And these must include an audit report on the statutory accounts and an assurance report on regularity. And as I'm sure you all know, they must be submitted to the ESFA by 31st of December each year. I'm going to cover the key changes for this year. So as I said, it hasn't changed too much in the last couple of years, which is nice. But a couple of the key changes here: so the structure, trustees report, auditor's opinion, staff cost disclosure note, funding for educational operations, leases, and long-term commitments. So the structure. So as I've mentioned, Coketown model accounts and the auditor's framework are now separate documents, which does make the actual accounts direction itself quite a bit shorter than it has been. And this remainder of the accounts direction is now in 3 separate sections. So the first part is the financial reporting requirements and common issues that are picked up by the ESFA in their annual reviews of Academy Trust accounts. The second part has got more detail on the key elements which make up a set of Academy accounts. It goes through the contents and the requirements of each report in the first part of the account, so the trustees report, the governance statement, and then it's got the details on the content of each note to the accounts that come after the SOFA and the balance sheet. And the third part has got a lot more specific and detailed guidance on some of the more technical scenarios, such as capital grant recognition, treatment and recognition of land and buildings, and new conversions, transfers and combinations with other trusts. The trustees report, there's not too many changes here really. There's some more guidance on what the content of the financial review is to include. So there's a list within this section of the accounts direction that covers what the financial review must include and also what it should include as best practice. Any trusts that have had a financial notice to improve, there's also additional disclosure requirements, and the accounts direction details those. There's a summary included this year of the different types of auditor's opinion, and the one that obviously everybody would like is an unqualified opinion, and then the other 4 here, so material uncertainty in relation to going concern. This is likely to occur if a trust is being closed or transferred into another trust. Addition of an emphasis of matter paragraph, so this will be to draw attention to an area that we've got concerns over. A qualified audit would be where we've not been able to obtain sufficient audit evidence, and an adverse audit opinion would be where there's material errors within the financial statements. So there's a bit of background there as to the different types of audit report that you may see. But like I say, everybody should be wanting to get that unqualified audit report. The staff cost disclosure note. So this has been updated to include some additional guidance on off-payroll arrangements. So if anybody isn't employed by the trust on the trust payroll, but as part of an off-payroll arrangement, then they are to be included in this note as if they are employed. The prior year comparative figures will also need to be restated if they were under a similar arrangement for last year as well. The funding for the trust educational operations note has usually got quite a few headings, so it's got your GAG, your other DFB and ESFA income and so on. The headings within this note have been revised, so they've been aligned with the headings in the accounts return. So this is part of the SFA's better financial reporting, trying to get all the returns aligned, make it much easier to report and not duplicate work. So GAG has still got its own separate line. Then we've got other DFE and ESFA group income. So within this section, any income streams that are material will have their own line, and then other funding will just be grouped together at the bottom of that section. And we've also got the other government grants, which includes your local authority funding, special educational needs, that sort of thing. some clarification in the accounts direction this year on leases and the treatment and classification. So just re-emphasising the point to ensure the classification between whether it is a finance lease or an operating lease is done correctly. So this should be classified in accordance with FRS 102, which is the financial reporting standard. So it will depend on if the risks and rewards of ownership are transferred over to the trust as to whether it's a finance or operating lease. And if you're unsure or looking to take out a lease and unsure how it will be classified, then just get in contact with your local academy contact from the streets. Long-term commitments. So this has been clarified that payments made under secondary arrangements with local authorities. So this will include some PFI contracts. So these should be included as part of the long-term commitments note. So that follows the lease note within the accounts, the Coketown model set of accounts. There's a couple of other minor changes. So the good practice guides, I don't know if anyone has seen these. There's reference throughout the accounts direction to some of these. They can be found on the ESFA website, and there's a link within the accounts direction as well. So there's about a dozen of these that the ESFA have released so far. Topics such as deficit recovery, risk management. For larger trusts, you've got a more detailed guidance on some of the additional reporting, such as streamlined energy and carbon reporting. So they're generally quite helpful. There's quite a few others on there as well. And the ESFA have also pointed out their feedback. So this goes both ways. So there's a summary of feedback from the ESFA to Academy Trusts and the sector. So this covers some of the areas of weakness that they've picked up in previous reviews. I think the key ones that they'd highlighted in this accounts direction are all in relation to compliance with some of the requirements of the governance statement. And then secondly, the ESFA have asked trust feedback on the accounts direction, the new format, the layout, how clear it is and that sort of thing. So there is I think there is a feedback form at the end of that, if anyone gets that far through the document. So they're the key changes this year. Like I say, it hasn't really changed too much in the format from previous years. The Coketown model accounts, again, the format of those has been relatively consistent now for a couple of years, which is nice. No major changes. So hopefully people are getting used to what they're seeing, and that consistency is good. And with the alignment of some of the notes now with the accounts return, better financial reporting, it should streamline everything going forwards. So I'll hand over now to Robert, who will go through the Academy Trust Handbook for 2021.
Thank you for that, Georgie. I am working from home, so I've checked. We've got no shopping deliveries, but my neighbour has lost his cat. So all I can see outside of this window is my neighbour on his hands and knees looking under bushes. So apologies if I get slightly distracted. Academy Trust Handbook. This might become a bit of a familiar sight. Apologies to whoever within your trust has to update your policies and procedures. I think there'll be a fair bit of find and replace going on over the next few months. In terms of the Academy Trust Handbook, and I keep having to say this quite slowly because by accident I do keep saying Academy's financial handbook, but the Academy Trust Handbook, just to recap, was issued in June, so some of you may have already had time to have a look through that. It is effective from the 1st of September, so of course in relation to the audit, our audit work on regularity, that will be looking at your compliance with last year's handbook. So this handbook is what you need to comply with going forwards. And as Baroness Berridge put in her introduction, it's really now designed to be a one-stop shop for trustees, local governors and leaders of trusts, and hence they're getting rid of the word financial and making a more all-round sort of trust handbook that you need to comply with. And some of the main changes that she sets out is obviously it now includes key legislation and guidance about safeguarding health and safety and estate management. I must admit, it is fairly brief, but I think it's something that we'll probably see develop over the years. There's also changes, obviously, again, dropping the financial side of things, so now it will just be notices to improve. They have one of the key changes, obviously, is reserving places in the governance structure for parents, carers, and other individuals, which I'll go on to. They talk about the benefits of external reviews and governance, and given the change in the handbook, that might be an area that you want to look at. And then also finally, there's increased number of cyber attacks, and this is something that we have seen with our clients' streets, and also it is in the press, and there have been some high-profile charities that have been affected by that. What's quite helpful in the handbook is obviously they do summarise all the key changes, and that's on pages 9 to 10. And really, even if you're not going to look at the whole document, then that's the area to look at, sort of what might be the key changes that affect your trust. They call them key changes, but actually quite a lot of the time they aren't key changes, and really it's reinforcing things in the past that's been in there that maybe hasn't been implemented as much as they'd like, or it's things that sort of developed from over the years. There's 18 points noted this year. I'm not going to go through all of them, but I'm going to just touch on some of the key ones. But I think the important thing is to look at, or try and understand why they are changing things, and sort of maybe look at the direction of travel, and some of the things that they introduced this year we might see developed in the years to come. The main area for change is roles and responsibilities. This is really the governance section of the handbook, and there's been 8 changes to this. And as I said before, one of the main changes is that the trusts should be reserving places for parents, carers, and other individuals with parental responsibilities. So really, if you're a standalone trust, then at least 2 of your board members should be from parents and carers. For multi-academy trusts, there is an option. It's either 2 places on the full board, or at least two members on each of the local governing bodies. Now, they have brought this out as one of the key changes, but interestingly, it's not a must, it's a should. So throughout the handbook, there are a number of areas which you must do. There is no argument. However, should means it's minimum good practice, and really you should be applying unless you can demonstrate an alternative approach. So there is a little bit of wiggle room in there if, for example, there isn't anyone to fulfil those roles, or you feel that your structure is better. So there is a little bit of wiggle room there for you. The roles and responsibility section it is quite a key area, and to be fair, if we get queries, it tends to relate to the governance side of things of the trust. And some of the points that keep arising with us, it's not in the key areas, but within the handbook in 1.5, it does note that employees cannot be members. Now, originally, the accounting officer had to be the founding member, but that changed a number of years ago. But 1.6 also talked about significant separation between members and trustees. And again, this is something that we've seen over the last year. There's been a lot more ESFA inquiries in relation to that structure. What has changed is that in 1.23, from March 2022, any newly appointed senior executive leader can only be a trustee if the members decide to appoint them. And again, I think this is just going one step further from previously where the accounting officer would be a trustee, and I think they're moving to a model whereby actually they're not expecting to see the accounting officer as a trustee on the full board. The section also does go on to say it is the department's strong preference that no other employees serve as trustees, and I think that will affect quite a few trusts. So I think there are a few things there for trusts to have a look at to see whether their structure needs to change. I think the problem is, though, that certainly for older trusts, these sort of structures are actually set out in the Articles of Association, and if they are going to change it, then they will need to change their articles to allow for this. And I think this is where some trusts are coming across difficulties, because when they go to the ESFA for approval to change their articles, the ESFA are actually requesting them to adopt in full the new model articles. And for some older trusts, there are specific things within their articles that they quite like or are happy with, and they don't particularly want to go and change the full articles, but unfortunately I don't think there is much of a choice when it comes to that. Other changes, the department's strong preference is that external reviews on governance are conducted routinely. It's always been part of the governance statement that you need to disclose what governance reviews that you've had, or if you haven't had one, what you're going to be doing. But certainly with the changes brought about by this handbook, we probably would recommend that you do look at some form of external review if you haven't already done that. And then one of the other changes which is worth noting, again, it's probably a case of looking at what are they trying to achieve with this. But what they've brought in is that when a senior executive leader is planning to leave the trust, the Board of Trustees should approach the Regional Schools Commissioner in advance to discuss the structure and options. So first of all, it is a should, so it's not saying you must, but I think it'd be quite hard for you to argue that you thought that there was an alternative approach that was better for you. You probably think that, but it probably wouldn't be a good idea to argue that. And I think what the sinister part of this is that is to discuss the structure and options. And to be fair, I think probably the feeling probably is that if you're a standalone trust, then actually the regional commissioners may be looking at other options, such as you joining a multi-academy trust rather than you bringing in a new accounting officer. So with this new requirement, if the senior executive lead is looking to retire, then you probably need to make sure that you address this early on so that you can achieve as a board what you want to achieve with their approval. In terms of financial requirements, there were only 3 changes, so I will go through these. In relation to 2.4, it's just relation to the scheme of delegation. And what it does say is that the scheme of delegation should be reviewed annually and immediately where there's been a change in trust management or organisational structure. The question for me is, why have they brought this in? And I suppose the answer must be that there must have been issues at a trust where they've gone in and they've noted that actually those delegations weren't updated. Obviously, there is a risk side of it. New staff coming in, there might be certain areas of your procedures and controls that you're happy with your previous management, but if there's new management in place, you might have to change that delegation, maybe in the short term putting in additional procedures and controls. The second change was reminding trusts of governance documents which need to be available for public inspection. It's actually quite a useful little list there of things that you should be including on your website. And I think I say this every year, that it is worth checking to make sure you are up to date. And the reason for that is that if there is any interaction with the SFA, one of the first things they tend to do is they tend to look at your website to find out a bit of information about what's going on, but likewise ensuring that you do have all the correct documents. And if it is part of a wider review and inspection, then it is quite an easy thing for them to say, well, hold on, you're not complying with the handbook in this regard, so what else aren't you complying with? And then again, I don't think this is particularly a new requirement, but the handbook provides guidance in relation to the information to publish on the website in relation to employees whose benefits exceed 100,000. Now, it sort of describes what needs to be disclosed, but the thing is, personally, I'm not convinced this discloses much more information than that's already included in your financial statements. And in fact, the disclosure required is the disclosure from your previous year end, your previous 31st of August year end. So there is an argument that you probably could cross-reference to your accounts, but probably I don't think that's what the SFA wants. I think they want you to give that separate disclosure. But as I say, I'm not convinced it really discloses much more information than what's already on public display. Internal scrutiny, 2 changes, and again, we've moved away from sort of the responsible officer, etc. Alan is going to talk about internal scrutiny, I believe, as part of his presentation. But what it does include in the handbook as a new area is that it explains the chair of the Audit and Risk Committee should not be the same person as the chair of the Finance Committee. Now, for a lot of you, this might not seem relevant because you won't have audit and risk committees. You know, it really is the multi-academy trusts with income over 50 million, but it is still worth reading through this guidance because actually there is bits that will apply to you even if you don't have an audit and risk committee. And in particular, it does say that where the audit risk committee is combined with another committee, employees should not participate as members when audit matters are discussed. So I think a lot of you will have a finance committee, which will also review the external audits, etc., and the result of the internal audit. But you just need to make sure that employees do step out of that and don't participate in that part of the meeting. And then also it does explain that internal scrutiny must not be carried out by a member of the senior leadership team. Personally, I've not seen that myself, so but obviously it must be happening in order for them to include that. What I would say about internal scrutiny is that obviously access to schools has still been disrupted during the current year. I don't think schools are doing the same programme of work that maybe they were doing in a normal year. And really some trusts have been looking at what pieces of work that they can do in order to still comply with the internal scrutiny regulations. But what I would say to trusts is that, obviously it is a risk-based approach. So actually, as part of COVID, the risks to the trust have changed, and really what you should be looking at is these change risks and how you've got comfort over that. And there might be sort of one-off pieces of work that you want to do because of COVID, because of the changes, or because it is something that you can achieve with, say, remote working. And areas you might want to consider is maybe compliance with a new handbook. There's cybersecurity. I know a number of trusts have had a one-off cybersecurity review, very important because of COVID, because of remote working, but likewise because of cybercrime. And I know a number of trusts have had external IT consultants, not the traditional external auditor or internal auditor person coming in, but a more sort of specialised IT consultant who maybe does a one-off piece of work to ensure that your systems are safe. Delegated authorities, there is just one change, and it's regarding prior approval for severance payments over 100,000, or where employee earns over 150,000. I don't think this will apply to a lot of trusts, but again, I think within the handbook there quite often are sort of one-off sort of events or musts that I think you need to be wary of, and that's one of them. Also, again, I'm always interested to understand why they've had to bring out these requirements, but there is now a requirement for trusts to provide ESFA with authority to obtain third-party information. That sort of implies that there's been cases where the ESFA haven't been able to get hold of information because they haven't been given approval. So that's a new requirement. Again, there is increased guidance on cybercrime, which I'll look at, and likewise, as we mentioned before, the renaming of the financial notice to improve. The cybercrime point is actually quite interesting. The new requirement is trusts must obtain permission from the ESFA to pay any cyber ransom demands, which again, why have they had to do this? And I assume there must be some trusts out there who have paid ransom demands. Personally, I've not seen that myself and wouldn't particularly recommend it, but obviously some trusts have obviously must have done that. And again, with cybercrime, again, is this an area that's on your risk register, and have you considered this as part of your audit program? And then finally, I did put this to the end because I wasn't quite sure the best way to approach it really. In terms of the annual accounts and external audit, one of the key changes is setting out when trusts should re-tender the external audit service. And what it says is that trusts should, not must, but should re-tender at least every 5 years. I think for accountants, I think this is probably an area of frustration. Certainly, as a firm, we get a lot of tender requests from academies that we don't act for. And we might get that request, we might submit a tender, we might attend a presentation just to find out that they've reappointed their existing auditors. And then 3 years later, we get the document again, we tender, we go on to presentation, and then they award the tender to their existing auditors. So really, what I would say, this is a should. I think obviously academies should be looking at the provisional external audit, but that might not necessarily mean going out to a full tender every 3 or every 5 years. It may be a case of just reviewing things to see, are there any aspects of the service that you're unhappy with, or maybe do some sort of cost comparison, but certainly you don't need to be going out for a full tender every 3 years, which some trusts do. So really, pointers to take away. I always say make sure that all relevant people have reviewed the new handbook. Certainly now, by losing the word financial, this is not just a financial document. This is not just for the business managers and the bursars. You know, this is for all of the trustees to be aware of and to ensure that they're complying. Make sure that you do a review of the key changes. There's also the appendix with the musts in there. So as an internal exercise, a trustee might want to go through those musts to make sure that you are complying. They are pushing the review of the governance structure, and I think with the changes and with the queries we get, I think that probably is an area that I would look to do. I always say make sure your website information is up to date, and then finally consider what internal audit work you've had done and what internal audit work you might want to do going forwards. And specifically, I think look at the key changes to risks, and in particular, what are you doing in relation to cyber security? And that's me done. I'm not sure if you found the cat yes or not. I'll let you know at the end, and I'll pass you over to Alan. Thank you.
Very much, Robert. Very much appreciate a lot of the detail. So when we were approached, Robert, Georgia, and myself, to do this presentation, and we know that you always find a lot of benefit in going through some of the ESFA documents and effectively translate them for you and try and put them into to make them slightly more understandable, because some of these things don't necessarily affect every academy trust. So it's being able to put that in a way to you so that actually you can understand exactly what does affect you, what doesn't affect you. And with that in mind, a lot of what I've done, as I've aptly named any other businesses, is I've taken certain areas that have been mentioned before and certain areas that in the past 12 months I get regular phone calls about, and I just want to try and go through these with you to try and again give a more personal human touch to what you're being asked to do and potentially why. One of the first areas that relates back to Robert's comments about roles and responsibilities is to do with this update that the ESFA has done to their model articles of association. These affect all different types of academies and free schools, and that they must be used for all new trusts that are set up. And obviously existing trusts can update their articles, as Robert mentioned already. Now, the key changes that kind of came out to me as a practical side of it is that there's a requirement now to have the majority of the members to be independent to the board. Now, particularly in your smaller standalone trusts, it was almost that the more senior trustees fulfilled the roles of the members, and it's a matter of trying to make sure and get out of that old habit of where it kind of fell into that situation that actually you are, as Robert just mentioned, that governance review, that review of everything, and you're thinking about actually, have we got the right levels of people? Have we got our trustees and our members further up, and is there enough distinction between the two of them that the members are holding the trustees to be accountable, and then the trustees are then holding the senior management team within the schools to be accountable? And it's having those layers in order to do it. There is a requirement now for the trusts to hold annual general meetings. Now, in effect, I would imagine that the majority of schools were doing this anyway, but the fact that this is now included. And the other one is the emphasis that a professional clerk is appointed for the Board of Trustees. Now, any people on here who I am your own audit engagement partner, you will have no doubt had me mention this in the past, because it's one thing that about 4 years ago I did an additional engagement for the SFA in a school, and one of their biggest areas that they wanted me to look at was the quality of the minutes that were being kept, and that they do actually reflect reality of what was happening within the schools, and that all these conversations that were happening by trustees were recorded for people to see, because we know that these things are discussed, but if they're not recorded, there's no record of it. So the expertise of a professional clerk is a very valuable one if it's deemed necessary. Again, referring back, Robert touched on internal audit. I'm going to look at this slightly more practically, as in what are the actual options that we have? How can we deliver our internal audit and internal scrutiny? Now, this has been extracted, so all these words have been extracted word for word, and I like to do that deliberately because this is from a document on the SFA website called Internal Scrutiny and Academy Trust. So these are their words, not mine. But what I'll do as I go through them is to just explain what, again, kind of what they mean and how it may impact or how you may want to consider the information. So the 4 options you have for the people that can carry out internal scrutiny for you is by employing an in-house internal auditor. Now, unless you are an extremely large multi-academy trust, that would be a very costly way of carrying out your internal scrutiny. But for those larger trusts, and there may well be some attending this or listening or watching this, that actually there could be a benefit of having someone's job role, assuming they have the appropriate skill set to do it, to look after an internal audit for the trust, and to effectively, their job to effectively go out to each of the schools within the trust and carry out internal audit services as their full-time role or part-time role, depending on how many schools are in the trust accordingly. So that's one option. The other option is to use an audit firm such as ourselves, and it become a bought-in service. This is something that you're finding that a lot of external audit providers are providing less and less. And the reason for that being is that the skill set required to carry out an internal audit is ever increasing. And what we as external auditors want to make sure is that you are getting good value for money, and you are getting the right expertise. So that's something that you may find that audit firms will do and others won't. The other one is an appointment of a non-employed trustee. So examples that I've seen in reality is a chair of a finance committee who happens to be an accountant or a retired accountant or a retired FD of a company who may have some professional qualifications, that they will undertake the internal scrutiny and carry that out. And the other option is a peer-for-peer review, where effectively the CFO or the business manager from one school will go and assess another school, and then in turn that school comes and assesses this school. So again, that is probably your cheapest option, because in theory you would just set off your costs with each other and it wouldn't cost you anything. But the key things that you have to consider when you're carrying out and you're choosing who should do it is that, do they have the relevant qualifications in order to carry out the work? So you need to think that actually, if there was ever a problem with your internal audit and someone says, well, okay, I think that was the internal auditor's fault, they should have spotted that issue. So what they would come back to you, those making the decision about the internal audit, is, well, who appointed those people? Did they consider whether they had the relevant skills to actually carry out that service in the first place? So that's the sort of things that you need to be considering when making that decision as well. So you may then go, well, okay, you've given me all these options, you know what I should look for, Alan, but how do I know what to do? So the key thing to know here is that you have to decide it on a trust by trust basis. You need to look at actually what risk is there within your trust. So what level of assurance do you need around who's carrying out the internal scrutiny for you? So you want to look at effectively the size and complexity of the situation that you have. I mean, if you have, let's say, so you've got your educational side, but then you've also got sports facilities, and you've got a gym that's open to the public within there, and actually the under the remit becomes a lot more complications. So you need to potentially increase that level of assurance that you're getting by having a slightly more professional, or for want of a better word, someone who's more used to dealing with internal audit looking at it. And the other thing that's really important that they want you to consider is thinking about how you change, and not just say that, well, my internal audit's always been done on a peer-for-peer review, and then you become a 10-school multi-academy trust, and then you're doing a peer-for-peer review with someone who's a business manager in a standalone trust, that it then becomes not appropriate. So it's again always constantly reconsidering those situations, you know, more frequently than the retendering of external audit, but almost on an annual basis, that you're considering, is our internal audit up to scratch going forward. Having attended a recent meeting, now I have to hold my hands up and say that I'm telling you about something here that I haven't experienced myself. So within this thing, we were told that the ESFA is effectively recommending using a View My Financial Insights tool for benchmarking your accounts. Now, this is only accessed via IDAMs and your DSI accounts. Now, obviously, with that basis, we only have auditor accounts and we're not able to see these things. So I haven't had the situation where I've been at a trust where I've been able to look at it myself. But I've been told that effectively this allows you to see all your schools together, and more importantly, that they try and compare your financial performance with the 30 most statistically similar schools across a range of categories. Now, it'd be really interesting that when we get around to that actually and seeing it, whether we feel that they're actually statistically similar or whether this is the ESFA's opinion. The reason being is that, as we all know, with sets of financial statements for academies, that actually the numbers in there don't necessarily tell the full story behind the numbers. And again, anyone who I'm the audit engagement partner from, you know that I stress that quite a lot, and I work with you all to try and make sure that you are understanding that what the numbers mean, and that sometimes statistically things may not necessarily tell a true picture. So that's something that to just consider. But it would be good to if you don't know about it yet, to go and have a look and see if you can find it. You can literally simply Google it and it will come up, and it will be interesting to see exactly how useful you find the tool. Another thing that you all may have already attended webinars, because the DfE SFA have been releasing lots of emails about join our webinar and come and look at how we're automating the AARs. And I attended one because I had one for auditors. Auditors, come along and see what we're doing. And in principle, the idea of having a more automated Academies accounts return is fantastic. It's a document that is extremely time consuming for us to complete, and for any of you that complete it yourself, you will understand kind of exactly how difficult it is, and how when you know your benchmarking report within it doesn't then tie back and you get validation errors constantly, and it can really drive you insane. Well, the idea is to allow you to automatically integrate your accounting software, so the trial balance, and it will automatically pre-fill in about 80% of the data in there. Now, that's all very well and good, and hopefully in a few years' time, we don't even need to talk about this because it will just be working. However, we all know what the ESFA are like when they pre-fill data for us, particularly in our budget forecast returns and other situations like that. And quite often, it isn't always what we quite think it should be. So it's very much a watch this space. They still class this transition as being in a beta stage, so it's still going through testing. And there are certain providers that are providing it, or software providers this is, that are looking at doing it and that already are doing it. So I believe Capita is one of the main ones that they do already offer this service, but other ones like Sage and PS Financials, they are in the testing process of trying to bring it in. So effectively, the way it works is it takes your chart of accounts from your software. If that is already in the DfE standard chart of accounts format, it just lifts and pushes it all straight across. If it's not, then there might be an extra step in it where effectively you would have to map your current chart of accounts in line with the DfE's chart of accounts in order to transfer it across. So again, it's a matter of making sure you're aware. If you're not aware of it, or if it is something that you're very interested with, make sure you go and talk to your software providers to see exactly where they're at with this situation and exactly what they want to do. And if there's anything you can do, you might be interested in trying to be one of these test subjects in the beta process. So the option is out there, but again, just wanted to bring this to your attention. Teachers' pension audits. So I'm sure that my next two slides, which are teachers' pension audits and budget forecast returns, they are the two things that are probably most on your lips at the moment, because they're the things that will be going on as we speak. For any of you that are our clients, you would probably be having your audit work ongoing at the moment, and if not, it's likely to start in the near future. One question that I get quite a lot is kind of the fact that you yourselves as Academy Trust don't necessarily know where we're coming at as auditors when we're auditing the TPS. Now, again, to cover that off, we have guidance called a TP05 that comes from the teachers' pension scheme that tells us exactly what we have to audit and what we have to cover in order to sign off it. So one of the things that we often get is, when we're asking for all these details and we select a sample of 20 teachers, and you'll go, oh, that's 20 teachers I've got to look at. Now, unfortunately, that's not us that come up with that number. That is stipulated within the TPS guidance, and that's exactly why we have to test that many people, and that is a minimum of 20 teachers. So larger trusts, you may find and that's 20 teachers per certificate as well. That should be being covered in order to sign off the audit report for each one. One thing that I always bring to your attention and will continue to do whilst we still see the errors is that quite often you'll see that I've done a little screenshot there of a section 3 of a TPS certificate there. There is a very simple way to double check this chart. Effectively, the contributory salary multiplied by each percentage rate in the tier. So for example, in the first row where you've got 485,000 of contributory salary, if you multiply that by tier 1's percentage rate of 7.4%, this should equal the teacher's contribution rate. And if you take the contributory salary of 485 and multiply it by the employer's contribution rate of 23.68%, that should equal the amount in that box. Now, that's quite a simple thing. We should all be able to do it. What that will do is that highlights where there is potentially some errors in the form. And this will also highlight that if we submitted it as it was, where the percentages don't cast across, that will then come back from the TPS and they won't accept it. They'll need to know exactly why it doesn't agree and come back. So again, that's something that I ask, and I know a large proportion of our academies do carry this out anyway, particularly those that have been with us a long time, because we've constantly go on about this. But any new trusts that recently joined us, that this is one thing that we really ask that you can do yourselves to spot potential errors within there. Budget forecast return. So again, this year we've got a single budget forecast return submission to make, as opposed to the 2 returns, the outturn and the 3-year form that we've had before. So again, the structure takes you through effectively summarizing out the prior year, the current year and the forecast year in advance. So these are done by splitting them into 7-month and 5-month periods for each one. The key thing that you need to be aware of, particularly if you don't have any assistance from your auditors, at the prior year numbers, so for the year 1920, your carry forwards and your funds there should be agreeing to what's in your Academies accounts return and your financial statements. So it's always a good point to just try and check what you think your revenue carry forward and your capital carry forward are at this point to ensure that it is agreeing with your financial statements. Again, if it doesn't, that's a surefire way that you may well get some questions coming back to you. As well as splitting out these periods, there are, towards the bottom of it, some additional summary level forecasts that are required for 2022, 22, 23 and 23, 24. And obviously the deadline for this report is the 27th of July, which I believe is a Tuesday, something like that. So again, I would suggest, if you haven't started already, that you have a good go at trying to get this done as soon as possible. And as always, if you do have any problems, please speak to your streets representative, who I'm sure will help you accordingly, and do our best to make it as easy as possible. My last slide really is to do with our end of year audits, and it's effectively remote or on-site end of year audit. We don't quite know where we're going to be, do we? Well, come end of September, October, November, and exactly what state we're going to be, what we can or can't do. But what we just want you to do is to be speaking to your audit teams, your audit representative at Streets, to just tell us what you think would be a good thing, what you are happy and are not happy to do accordingly. You may say, actually, we don't have space for auditors, and to be, you know, appropriately distanced from people. And actually, as auditors, you're visiting 6 different schools in the space of 4 weeks, and actually the risk of you bringing and moving things around is quite high, and therefore would prefer a remote audit. Or the opposite way, you might think, actually, we had a remote audit last year maybe, and actually we'd really benefit from you coming and spending a few days on site in order to do it. So that would be again another way that we could run the audit, and it could be a balance of the two. So I guess my key point being that you make sure that you've spoken to your individuals, and that you've stressed exactly what you're willing and are not willing and are happy to do. We are, as auditors, very flexible with our clients. We always do our best to try and keep everyone happy, and particularly in these times, trying to make sure that you and your staff are comfortable, as well as our staff that are auditing are comfortable in the situation that we're doing. The other situations that may or may not arise as well is that we're going to potentially have self-isolation issues through the audit, should self-isolation still be a thing by the time that we're there. So again, we just ask you to bear with us as auditors, because the situation could arise that one of the audit team would have to self-isolate, so therefore we would have to try and get them to be able to do their work remotely in tight schedules. Alternatively, you may find that business managers and finance staff in your school could potentially be at that point of having to self-isolate. So again, all I'm stressing here is very much make sure that you've got open dialogue, open communication with your audit team and your audit engagement partners, to just make sure that we can try and have a smooth audit process, and that it's safe for everyone being able to do what they want to do. Now, at that point, when I wrote my slides, I was, well, that's about what I wanted to cover. And then lo and behold, and I'm sure you all saw that there was an email that came across yesterday with our Dear Accounting Officer letter that comes out every single year to go through it. Now, I know, having seen these over many years, that a lot of it is a regurgitation of your financial handbook and your trust handbook and your Academies accounts direction. But the key page I always flick to is the last page, because there's always a nice little chart of what our deadlines are going forward. So the key deadlines, if you've not been through the letter yet, that you need to consider are that the Land and Buildings Connection tool needs to be submitted by the 9th of November 2021. At the moment, and I say at the moment, and I don't expect it to change, the financial statement submission deadline is the 31st of December 2021. So no sign of any extension being made. I assume that the ESFA deemed that actually we've been through one COVID-related audit cycle, and actually we should have the processes in place to not need any 1-month extension anymore, and that they're hoping that all that deadline can be sorted. The Academy's accounts return, again, that deadline is the 25th of January 2022. So again, that will need to be completed by that date, and no extension on the submission of there. Then at the moment, the plan next year is to revert back to 2 separate budget forecast returns. You've got your budget forecast return outturn, which has to be submitted by the 17th of May 2022, and then your budget forecast return 3-year report, which has to be submitted by the 26th of July 2022. So back to your May and July submissions for your budget forecast return. I think that was everything that I wanted to cover. So I hope you found that it's been helpful, the bits I've covered, and thanks to Robert and Georgie for their summaries as well. And I'll hand you back to James to bring everything to a close.
Thank you, Alan. That was great. If I may just pick up on some of the questions you kindly answered, is the date for the AAR due on the 25th of January? So that's yes. I'll probably just go to the top of the questions, which are probably pick those up. So Sean says, am I right that there is a significant charge for changing the articles? I think it might depend on what changes you make and who you engage for the changes. Robert, do you want to pick up on that?
Well, fundamentally, you could adopt the standard articles, pass a resolution, and submit to Companies House. So theoretically, there doesn't have to be a charge. I think the cases that you probably will want formal legal advice, A, on the process, and B, on what the changes are and what that means to your organisation. But the other thing really is probably the investment of time as well, because obviously this is going to take up senior leadership time as well as trustees' time to do. So yes, there could be a reasonable charge attached to it.
And I think again, it comes back to what expertise you've got in your academy in terms of the senior leadership team, depending on the size of the academy, whether your clerk is of experience to that, or whether the members of the boards with board members with experience. So very valid. What constitutes a change in trust management?
I think this is in relation to the scheme delegation, but yeah. I think it's really a case of what members of management are included in that scheme of delegation. So therefore, if there is changes in those particular roles, then that would warrant you re-looking at that scheme of delegation.
Thank you. And a question from Stephanie. I've benchmarked a number of local SATs, and they would all need to change their ANAs. Is this part of an ESFA drive to encourage SATs to join MATs? I don't think we can necessarily know that, can we? I don't think we can comment on that.
Well, I think a lot of trusts who have the older articles won't be in compliance with the handbook in terms of the different roles. Whether the ESFA will allow simple changes, I don't know. I've certainly seen one instance where a fairly simple change was proposed, but actually the ESFA insisted on adopting the full articles. Whether that's used as part of encouraging people into multi-county trusts, I'm not sure, but it could certainly start a dialogue.
And a new chair of trust or a new HT?
So the regional school commission will need to be formed if it's effectively a change in head teacher. I think that's the point.
Yeah. And Maxine, I have two members who sometimes attend trustee meetings to observe, but occasionally ask questions. Should this be discouraged? Depends what the questions are.
I shouldn't say that. I think I think that they are following their remit. They are entitled and encouraged to attend meetings to observe, to make sure that they are up to date, and asking questions. I think would form part of that. So. Unfortunately, I don't think you probably should discourage that.
And then, Anne, where can I access the Cooktown report in Word format? And Georgie, do you?
It's currently a PDF version on the ESFA website. I think we do usually get a Word version, usually over the summer holidays. So when we've got that, we usually circulate it around to our clients. And that means they can obviously update the trustees report. So it's compliant with current year.
From Carrie, does trustees change mean no staff trustees? I suppose changes to trustees.
I think it goes back to the point that actually the ESFA really don't want to see staff members as trustees. Really, I think that's the point of their guidance.
Is that relation to accountability and independence then, do you think?
Yes.
Yeah, thank you. Any further questions? We've done extremely well. It's 11:59, so and probably a few seconds. can I thank our presenters for, as usual, an excellent presentation, though we always miss at these virtual events, the sandwiches and the coffee and the chat. Who knows, we might be back to that next year. But thank you for your excellent presentations. As I say, the slides will be shared and the recording of this presentation will be available. As ever, I hope this promotes our expertise and support for the academy sector, and the delegates have found this useful. All it leaves me to wish you is the best part of the rest of the day. So can't wish you a safe journey home when you're having a virtual event, but don't trip over when you go to make the next cup of coffee. So thank you very much indeed.